Ladies and gentlemen, welcome to the market update, the weekend analysis. I hope you guys had a good week trading today and this week. This is gonna be the very first market update video / analysis for the year 2021. And in this video, I'll try to recap all the major indices, as you can see on your left here: Spider, Qs, Semiconductor, banks. We'll look at Russell 2000 also, and we'll cover VIX and gold, and obviously we'll end the video with the Bitcoin. But I think at this point, because of what I can see, what I can feel, with the market and how most people are interacting, and the vibe that I feel in the social media and things like that. There's a one side where people are extremely optimistic that this market is bullish, and we got another side where people are extremely pessimistic, where this market is up too much and there gotta be or has to be some kind of a severe big correction. And you guys know where I stand. One of the most difficult part in this market is trying to time that correction, right? Peter Lynch, I think, famously said that more money has been lost trying to prepare for the correction than the correction itself. And this is kind of one of the reasons why I like to stick with the trend. I want to give benefit of the doubt to the buyers. I want to assume that trend is going to continue. I mean, we'll react, we'll change our stance when we start to see certain evidence of this market behaving or establishing some kind of a downtrend. But I think as long as we see this market cultivating higher lows and higher highs and we get into an uptrend, I think I want to assume, right? Doesn't mean I don't know exactly for sure how this market is going to play out this month, but I want to assume that market is going to continue in this uptrend in the month of January. And I'm going to try to figure all of that out, and it is all coming up right now. So let's actually kind of follow up on the 65-minute chart on Spider, and I'll come back to it and I'll analyze a bigger picture on the daily chart here. So let's actually go back to the 65-minute chart, something we've been talking about this week, right? So we've been tracking several things here, I think, since the start of this year. You can see January 4th. Since the start of this year, first thing we tracked was that midterm moving average, because we saw that midterm moving average acting as support back in December. We also talked about that short-term moving average, right? That's what happened here, and this was Tuesday, I believe. Wednesday, right? The Wednesday morning, we came to the market gapped down, but we saw that short-term moving average acting as support. This is important because when the short-term moving average acts as support, we want to continue to give benefit of the doubt to the buyers in the short term. You can see when the short-term moving average was lost, we saw how quickly saw some weakness that coming in here, but we talked about how we shouldn't get into a dramatic conclusion just because we see a one-day decline. And so market continued higher, and then this was what? This was Thursday. No, this is still part of Wednesday. This is still part of Wednesday price action. So on Wednesday morning, we saw big buying the dip activities here and then continue march higher. But on the last couple hours or so on Wednesday, we saw that little bit of decline. But we also talked about on Wednesday that, hey, you know what? As long as we continue to see this market staying above my short-term moving average, and my moving average is rising, and it did act as support, is no longer supporting the bears, but it is supporting the buyers, we want to give benefit of the doubt to the buyers, right? And what happened on Thursday, we came into the market on Thursday, we see a gap up, right? And we see a big bullish move there and pretty much grinded all day. And what we talked about yesterday on the daily update video, we talked about how buyers are kind of getting into that level where they might be a little bit tired. That doesn't mean they can't keep push higher, you know, and we talked about how they might see another push, maybe some sideways move, potentially kind of get that oscillator to reset or sideways. So we did see a little bit of gap up and then pretty much move sideways all day. And then on the third hour, we pulled back. But as I've been tweeting out all day today, we talked about that rising pivot. And we've been tracking this rising pivot pretty much all this week. And at some point, you know, price like to, and this is how the short-term pivot was born, because this isn't a real pivot until you see the, you know, that resistance acting as what? Support. So once you see prior resistance acting as new support, then you know that is now, you know, cultivated, right, as a new pivot. Not to mention, this is the area where we not only we saw that rising pivot there, right, becoming a rising pivot, but at the same time, we see that short-term moving average is guarding in that vicinity, making sure the price doesn't go any lower, supporting the buyers, right? Same thing happened here. There is that decline, making sure that short-term moving average is not going to let the bears come too easily and supporting the buyers. Same thing happened here, right? So once you see the price flipping back up above my short-term moving average, we want to give benefit of the doubt to the buyers. That does not mean the market is never going to see a correction or a pullback or a decline. But when we do see a decline like this, we want to assume that the short-term moving average or that vicinity is going to act as support, and this market is going to continue to cultivate higher lows and higher highs. And in that process, what are we doing? We're establishing an uptrend, right? These are subtle higher highs, but this market continues to do it, right? High, higher high, higher high. We got the low, 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 right? Low, higher low, higher low, higher low, higher high, higher high. That's basic technical analysis to identify an uptrend, is identifying higher lows and higher highs there, right? So I'm actually going to move this up here because that looks like that resistance, right? That micro-term resistance. We've been hanging there for about 4 hours before we did see this thing coming down, retesting that rising pivot. So I want to give 380 as that micro-term support. We still got that rising pivot. Should the price come back down or something like that on Monday, that's a level to watch. We got short-term moving average guarding just underneath that rising pivot. Not to mention, we got the gap area support 376. So there are a lot of support levels beneath 380, right? So let's continue to give benefit of the doubt to the buyers. Let's check out that oscillator. Maybe we'll get a little bit better idea where we're at after today's market move. So you can see there's something is happening here a little bit. What I see right now is there are times where once the buyers got tired with these overbought sentiment, and then we saw this cross here. There was a cross here, there's cross here, there's cross here. There's something a little bit different about this current cross. We saw a cross here, and then looks like we're gonna cross again right here. So instead of this market seeing, or the oscillator coming down, at least you see that dotted line here, right? You see that dotted line? It's there for a reason. You see this thing coming down beneath it and then hitting the dotted line and then pulling back. You can see here, once we saw a cross, we're getting below the dotted line. And that's kind of where we saw price losing that short-term moving average. Same thing happening here, right? Once we saw oscillator losing that dotted line, we kind of threw that bearish divergence, right? Price did make a higher high here. However, with that oscillator below that dotted line, the momentum was you know what I mean? It's losing some steam here. It's looking heavier, especially with the bearish divergence. A lot of times what the bearish divergence does is telling us that buyers are pushing one more time, but it's losing steam. They're getting extremely tired. There's just one last exhaustion move. And so that's kind of what happened here, getting below that dotted line. That's what happened here. Once we got below the dotted line, we lost that short-term moving average. Same thing here. We actually lost the dotted line here. But while the price moved sideways, out of nowhere, all of a sudden, we saw very, very fast decline there. So once we kind of lose that dotted line, that's why it's there, that kind of telling us that buyers are kind of losing grip of things. There's something different happening here today, however. We're staying above that dotted line, right? Despite the fact that we saw a couple whipsawing crosses, we're staying above. Remember, that's the dotted line right here, right? So you can see we're staying up. We're not getting beneath it. It doesn't look like this. It doesn't look like that. It doesn't look like this. It looks like that. And it almost looks like it wants to cross back up again. That means market is maybe creating just a little bit of space to push maybe a little bit higher. That means we got this much room. That's another day of run if we do see this thing crossing back up. It looks like the way the market closed, as you can see here, if we do see a continuation to the upside on Monday morning, even if we see a gap up or something like that, this thing is going to cross back up quickly before we're getting back up here. Another push back to this level, which is overbought level. That means oscillator just kind of created little space itself. Kind of looks like, think of like Michael Jordan is heavily defended with two players, creating that fadeaway, creating that space between the defensive player so he can take that shot, right? Creating that little bit of space, because when it's smothered too much, I think that's kind of what I can see here. It's like it's a bit smothered here because buyers are starting to get tired a little bit. We saw that cross yesterday, and then seems like we saw another cross today, back to back, and it looks like so. It's like it's hanging on, holding on, moving sideways, creating that little bit of space, letting the oscillator just you know what I mean, just make a little bit of move, crossing back up, and then potentially bring it up, and in that process make the price advance further to the upside. That's kind of what it looks like. So what bears want to do, obviously, is kill this momentum, bring it down below this dotted line. Best bet is gapping it down, some kind of shenanigan move like this. And this is totally normal. Once in a while, here and there, market is going to give you these quick, abrupt, shenanigan one-day decline. It is given. Nobody knows when it's going to come. It's always given. So when we do our analysis, we always do our analysis based on what you see with the sentiment, with the gauging the sentiment, right? That's kind of what we're doing. So we want to continue to give benefit of the doubt to the buyers, and it favors the buyers going into early next week there. So let's come back to the daily chart. So we've been actually tracking this rising pivot, right? Here, 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 here. The further the price goes up above this pivot, the better it's going to be, because the closer it's going to stay around, you know what I mean? There's always that risk of that move, this move being some kind of a trap, head fake before this thing coming back down. The higher it goes, the better it is. Why? Because if it comes back down, a lot of times it's coming back down to what? To retest. So that's why it's a good thing if it keeps on moving further away, despite the fact that it may want to come back down, may or may not. I don't know. I don't know for sure. I don't know for now. At this moment, I'm not sure. Though, when you see a pivot this strong, right? And I'm going to show you in the Nasdaq, where Nasdaq has already gone through the process where it's made a big move, came back down, retest. I'm going to show you on the Nasdaq what S&P might be doing. But when you see a pivot this long, right? Because this is a multi-year pivot, 2018, 19, 20, 21, starting a 3-year pivot. Yeah, sooner or later, it's going to want to. Doesn't mean it has to. More often than not, it's going to want to. But the further it goes up from it, the better it is. So we don't have to, you know what I mean? Because then we don't have to worry about this potentially being some kind of a bull trap before this thing curling back down. But we can see we're actually making a move to the upside, and that's a good sign. I gave you that fib level last month or two. We've been keep tracking of this. You can see we measure from here to here. We made that move. That's about 20% move in 2 months. That was a fast move from 300 to 360. You guys remember that what happened in July and September, July, August, and September. And then we saw 12% or 10% pullback. We saw 8% pullback, lining up with my Fibonacci retracement zone. Both times we found support. That's coinciding with the long-term moving average here and long-term moving average there. 50% retracement. Both times found support. We got up, and then you can see how it's been kind of dancing around with that rising pivot, and it looks like we're finally making a move here. So we have first resistance level at 138.2% expansion, right? So we got these retracement, right? From the move, we retraced, cultivated higher low, and then we are making a move to where? To expansion. So we are right on that 380 level. Next stop is 400. The question is, are we going to find resistance at 138.2% or not? That is not a known resistance because there's nothing. We're making all-time highs. There's no price. There's nothing here. We're just assuming based on Fibonacci here, this might be resistance. We don't know it though. But that's kind of like, this is kind of a good price action. So we found support here on the retracement, and then we break above the pivot. We retested for a whole month of December, and then now we're going to 382 here, which is the first level of that expansion. So that's a level to kind of, be aware of, but that doesn't mean that's going to be a resistance level right now until we see some kind of evidence. And I want to continue to give benefit of the doubt to the buyers, right? I sometimes I sound like broken record. I say that all the time. It's because we're in an uptrend. We've been in an uptrend since early November, looking at things short to midterm, right? And how many times do you think people trying to short it and ended up missing? And that's something I like to say. I say a lot is that you trying to avoid a correction, and you end up missing out rallies. That's a lot of time what happens, right? So when the market is kind of in that mode, is that marching mode, you want to continue to assume, right? Like Charles Dow theory or Dow theory suggests the trend is assumed to be in effect until it gives us a clear signal that it has been reversed. We don't have any clear signal that it has been reversed. We never saw any kind of clear signal, this entire month of December, right? There was no clear signal. Anything we saw a breakout, anything we saw a double bottom, we saw neckline holding. If anything, we got the rising pivot. We broke above the rising pivot. It's been acting as support. But there was no real, clear signal the trend has been reversed. If anything, the market has been actually respecting these levels very well, supporting the buyers. And as you even can see, my short-term moving average on the daily chart, right? My short-term moving average continue to act as support there as well. And we also kind of, I can even put this short-term pivot right here, right? That's a long-term pivot, and we got the short-term pivot, which we looked at on the 65-minute chart, right? Like that. And you see that long lower wick there today, got right back up. So I want to favor the buyers going into next week. I want to give benefit of the doubt to the buyers going into the next week. And as far as a long-term trend is concerned, and you can go and read my article that I wrote, forecasting 2021. It's in my blog at twotradersclub.com, right there. But again, the market there was some craziness. We saw in COVID. This is 2018 decline. That's a early 18 decline. So market was in this kind of a, difficult years in the last several years. And market swiftly came out of that. Though it was tough years, 2017, 2018, 19, 20, with these abrupt corrections, very fast, sharp, right? But market came out of it quickly, and we're now getting into that level where this market is resuming with this primary term uptrend. We pretty much, because we had a good run from 2016, right? 2016 being low here, and then went all the way to 2007, because 2016 lows at 180, right? Spider trading at 180, and 2016 lows, we made a trip all the way to about 280s, and then ever since then we've been kind of moving sideways. Generally speaking, obviously we did have these moves, but probably for about 3 years we kind of, you can say that the market has been moving sideways, and we actually look at that as 3-month consolidation. 3-month consolidation. It would have been dangerous if we saw 12%, 25. What if we did 12%, 25%, 35%? Well, that's real bear market, real bear, bearish downtrend. We're talking primary term. By the market going down, going up, coming down, going up, coming down, it actually helped to make this market propped up instead of what if this market did this, right? So we saw 12%, 25%, 35%. That's how this market is going to cultivate lower highs and lower lows, get into bear market. But despite the fact that we saw these steep declines, what does the market do? Those are higher highs. Higher highs. So it doesn't quite fit as a real bearish primary downtrend, which needs lower highs and lower lows. But with these higher highs in place, it fits in a category of this market being, yes, there was very, very fast declines. It was very, very scary. But overall, in the last 3 years, 2018, 2019, 2020, we were in this consolidation phase where market was going up and down, generally speaking, moving sideways, digesting some of those gains that had a good gain since 2012, 2013, 2015, and then it went to 2016. We saw the consolidation in 2015 and 16, and then we saw a big move from 2016 lows to 2017, and then we also saw these, but we never got into a real bear market with these higher highs. Does that make sense? Let's go Nasdaq here real quick. So this is kind of what I was talking about. The Nasdaq already gone through what Spiders is just witnessing. Right now, Spiders somewhere here, right? Because Spider just broke above it, and then we did that little retest like this on the Nasdaq, and it's breaking out above and making the all-time high. So Spiders are somewhere here, right? And then what happened? Nasdaq made a big move to the upside and came back down, retested rising pivot, and that's such a prolonged pivot. That's a multi-year pivot. Market likes going to come down and retest it. It is no coincidence. It is no mistake. When market came down, it came down to retest that pivot, right? Again, it wasn't a pivot, it was a resistance, but once it retested it and then broke above it and made a higher high, then the rising pivot was born, right? And a lot of people were actually looking for a much steeper correction on the Nasdaq because we saw such a big move, right? And a lot of people thought it can't possibly go any higher. And I think a lot of people are saying that here, when we got to the all-time high, that was gonna be a double top. So many people quick to, call out these things, but it's one of the most difficult, again, it's one of the most difficult thing to find that top. It's the most difficult. It is probably going to be easier endeavor to find that low in a primary term uptrend than trying to find that top. Anyway, so even here, but we made a big move, and once we broke above it, we came down and retested it a couple times, and that rising resistance became pivot, found momentum there, gathered strength again, because you know what, market was overbought. Buyers need to take a breather and take some rest, and in that process, we did see some consolidation. That's a neckline, broke above it, and we see we made a new all-time highs today. Where's the top? I don't know, man. Is this gonna go to 360? See, I don't know where the market is gonna be on Monday, right? Nobody does. I don't know where the top is, but I'm going to assume, right, that this market is gonna continue to move in this fashion. And even if I zoom out here, my short-term moving average is continuing to act as support here, right? In that process, we're continuing to cultivate higher highs and higher lows. You can see that that was a nice base. I mean, Nasdaq didn't go anywhere since early September and October and November, right? So pretty much 3 months we consolidated. So that's what we call correcting through what? Time. It didn't correct through price, but it definitely did correct through time. And then that's the neckline, right? That's a neckline of that potentially some sort of double bottom there. Neckline was retested almost perfectly, and then market continues higher, right? So when you see this happening, what do? I just want to continue to assume that this will continue until the market gives us some kind of evidence the trend is shifting. Let's go semiconductor here. So semiconductor is out of this world because, well, you thought that, you know, buying at the all-time high was crazy. You made more money here writing this, buying at all-time high, right? And you know why this market do stuff like this? Because it was, you know, semiconductor, SMH, was trading at 97 or so. It's trading at 235 now. Why does either a stock or index or ETF does something like this where you think that this market can't possibly go any higher, but it does go higher and higher and higher? Because market, here's the thing, psychologically, market is going to make sure if you're not already in it at these levels, right? Even buying at all-time high levels, if you aren't faithful enough to buy the semiconductor at low price, then you're not going to have to buy it up here. And those people who missed looking to get into semiconductor, Nasdaq, or any index or any stocks, they are waiting for that pullback to get in. Well, market is going to make sure you don't get in. You're not going to get that good price anymore. So this is how this market behave when there's certain type of action occurs. In this case, it was COVID decline. The tremendous fear that happened. A lot of people, a lot of retail traders was not able to get in because it was so fearful. And then as the market started to get into new all-time highs, right? People are starting to realize, yeah, well, it looks like we're getting back into an uptrend, right? Now I'm going to get back in long. But you know what? What they say is, you know what? I'm going to wait. I'm going to be a smart investor. I'm going to wait until, you know, this market gives me good price. I think correction is coming. I mean, you know, the market already made a good move into March. So there has to be some kind of a big correction. We're talking 20%, maybe even 25, right? If you were waiting for that, market is up too much. So you couldn't get in. And another thing is that people are thinking, so because a lot of these people couldn't get in, so what do? They want to short it. They're bored. They're just sitting on sideline, market keep going higher, but they realize they can't go long now. They already missed it. The train has already left. They want to short. And the market is going to make it extremely difficult for their shorts to live their life. And then the market goes higher and higher and higher without seeing proper, quote-unquote proper pullback that everyone likes to see. And that's kind of what's this move that we've seen since the March lows, it's been all psychological. A lot of these stocks moving up, a lot of these sectors, indices moving up like this, it's pretty much all psychological. People who are brave enough to buy at these lows and accumulate at these lows, well, they're getting rewarded if they're holding these. But people are waiting to find a better price. They're not getting it, and market is going to make sure you're not going to get it. And when something like this semiconductor is at this level, you don't try to short it, but it is also you don't try to go long. You just have to let it go. Right? These were shallow pullbacks. If you're not able to buy these dips, so that's what I like to do. Is a lot of times, it's always kind of. That's why it's so difficult to find quote unquote confirmation before you go long. If you see a good price that you like, sometimes you just gotta pull that trigger, and that's essentially what you had to do March lows, because a lot of people are looking for some kind of signal, and V-shape isn't one of them. Do you know why? Because V-shape is one of the most difficult reversal to get into, because you never know when the V-shape happens if there's gonna be lower high before this thing do this, excuse me, or it's gonna be some kind of a double bottom retest. I remember a lot of people were talking about that back in April, May. That's gonna come back to retest March lows, and a lot of people are waiting for it. Market didn't give it to them, right? Let's continue here with the banks. Banks finally caught up here. Actually, year to date, banks and the Russell 2000 is outperforming the Nasdaq and S&P. Russell 2000 actually outperformed the S&P last year. And we had a great move on these lagging sectors, small caps and the banks. And I'm glad to see that. And I was kind of, we talked about how I was anticipating this rotation happening where we need the Nasdaq to take it easy and slow down a bit and let these laggers to catch up. We're back to the all-time high level there on the banks. So we might see some kind of resistance or something like that there, or we might just gap up. That I don't know. But we have that rising pivot. I'm not sure at this point we're actually going to ever retest this, because there's this pretty nice gap there. That's going to provide solid support should the price come down. So I want to continue to give benefit of the doubt to the buyers in the long term on the banks. In the short term, it looks like we had nice move, but I think when the market kind of get into that move here, you don't know how long it will grind higher, right? Did you know that I actually had to buy? I was in some position on XLF. I was buying bank stocks and XLF calls, bank call options. Not only I was buying it here, but I actually had to buy. I actually add more on this gap up. That was a big gap up. Did you know how much gap up this was? 6-7%. So again, I had some here, but I also had to buy more, and I wanted to buy more on this gap. A lot of people feel that they feel uneasy about that. Wow, banks already made a 7% in one day. How can you buy it here? So you really have to understand the psychology of this market. Look, from there, here's got 20% move, 20%, right? That's a huge move. So that big gap up actually was that start, and it didn't move right away. We saw day to day. You see these sideways move. A lot of up and down shenanigans. This is why you don't want to pay attention to day-to-day fluctuations, but overall picture. So even though I bought this, I had a great gain on this rally because I recently closed it out on this move there and holding through these up and down sideways. So a lot of times, we're kind of getting into the environment, if you wait too long to pull that trigger, if you second guess yourself, it's going to be very easy to miss that move. I want to continue to give benefit of the doubt to the buyers. I think we may pull back, and I think this level is going to act as support before this thing breaking out, and then sooner or later, I think banks are going to make new all-time highs there. Let's go to Russell 2000. Russell 2000 made a big move. And guess where it came down to? Did you know that Russell 2000, just the performance since the November lows, you can see a 40% move, right? And look at that, how it moves here with that rising pivot here. And you can see this thing up and up and up and up and up and up and up, right? And you can see here, a lot of people thought that after this gap up, it would have been hard to buy at all-time high, right? We saw this gap up, right? And we're at all-time high. A lot of people like, that's difficult to buy, but sometimes, you know, and I think for me, buying it there, because I looked at it as there's a pivot here, and I've been sharing these charts here on Twitter and StockTwits, and once we see price getting above that pivot, right, I kind of look at that as a more like a breakout. And sometimes we see a breakout and then come retest, and we kind of did that here. We saw a breakout and then we quickly retest, and it was quick. It wasn't like, you can see that quick retest before making a move here, and then we made a move and you can see each day there's something. Their whole week where it did nothing. So you see, there's always that suspense, like this market might not go any higher, and then it does, and it does, and then it does, and then the markets are pulling back so quickly. A lot of people are calling top. This is gonna come back down to 170, meets with my short-term moving average, and make another move. Boom. So calling the top is the most difficult endeavor, and that's really how you go broke in this market. And I would not recommend, and I want to continue to give benefit of the doubt to the buyers, and I want to assume, despite the fact that you could look at this, that can't, okay, there's no way that can't go any higher. Well, tell it to Semiconductor. I'll zoom in for you. Tell it to Semiconductor. You look at this, is that, yeah, Semiconductor's dead. Can't go any higher. Like, no way, man, no way. You know what I would have said? I would have said the same thing, and I probably did. I want to continue to assume the trend is going to continue, and that was what, 160? We're at 230. We came from here to here where you thought it's impossibility that it goes any higher. So we're here, right? We're here. Can it go higher? Can it go to 240? I want to assume that it could continue, and I want to continue to give benefit of the doubt to the buyers. And that doesn't mean it's hard. You can't chase. There's a reason why the market keeps going higher and higher, because you can't chase it. And people who get out too early, they're gonna feel like they're gonna miss out, right? That's why it's good to get in long-term positions and then hold through. And it's good. It's sometimes good to have a long-term position and also have a shorter-term position. So you close out your shorter term. If you had a call options or something like that, you enter here, maybe when you bought it right there. After this makes a move, you close out your calls, but you still hold your longer-term positions. It could be, shares on Russell 2000 ETF or small-cap stocks that you bought, and then you look at that as long-term. You hold through, and then you ride this move. And that's how I would, engage in this kind of a market condition. And I think biggest regret a lot of people want to have is closing positions too early and missing out much bigger move. And that's kind of the psychology, the environment that we're in. Let's go to VIX here real quick. I think this video is a little longer than I've anticipated here, so I'll speed it up here. So we still have this. This gap hadn't been filled, and we talked about probably going to get filled this year, but we've been pretty much, VIX has been kind of moving sideways. We've been seeing these pops here, and in that process where VIX is kind of going sideways, we see the equities making a move. So essentially, VIX being tamed here, moving sideways, is actually not a bad thing, because in that process, you see these equities to make a run there. Let's quickly go to gold. We did see gold get hit a little bit. I did hear some concerning tweets and stuff about gold, but keep in mind, gold is gonna have its big up days, but it's also gonna have its big down days. It's all part of it. But I think as far as the technical posture is concerned, I like the fact that we kind of came up here And that's what I like to look at that as an equal high. So we're no longer in a lower highs, right? That's a high, that's a lower high. That's a low, that's a lower low. So we were in this kind of a short to midterm downturn on gold. With that equal high, now we're kind of neutralizing a little. We're slowing down. So what bulls need? Bulls need to cultivate that higher low for the first time because we got that low. We don't know yet as of today if that's going to be higher low. This thing started going up here, creating higher low and higher high. That's it. This thing ready to get back up there. Let's go to Bitcoin. So you guys remember, I don't know if you guys remember, you guys know how I've been trading Bitcoin here. So I first entered here. And then I closed a half or so or something like that there, added more here, and then I closed half here, and then like a 1/3 Wednesday or something. So I do still hold kind of a small size now, because I've been closing them out on this move here. So I got small size I'm holding. At this level, there's nothing to analyze. There's, you know what I mean, either market, this Bitcoin keeps going higher to the upside. We are overbought. We are overbought in daily and weekly. But you know how these things go. Sometimes Bitcoin can go really crazy and go higher, or this thing can crash down. So how do you deal with it? So you close out, lock in some gain, but always hold some. You want to hold half, or depending on your tolerance level, hold some. Maybe hold 1/3 or so that if this thing keeps going higher, you don't feel too bad, right? And then it goes to like some crazy levels, then you can all close it out and say, you know what, I feel very full. If it keep going higher, whatever, I'm feeling full right now with the Bitcoin longs. So you can do it like that instead of closing everything out. I always like to, hold some just in case the Bitcoin can continue higher. So, well, you guys enjoy your weekend. I'll come back for you next week. Good luck trading next week.